Joining us now is Rodney Anderson, Executive Director of Supreme Lending and author of Credit 911. And Rodney, I guess the question is, any hope of a housing recovery in the year ahead? What do you say?
Ashley, let me give you a news flash. 2011, home values and home sales will not increase. The infrastructure of the credit markets are broken, and people are having difficulty accessing credit. What happens is, imagine you pay your bills on time for 30 years, and a $23 medical collection goes to your credit report, drops your credit score 137 points, and you have to pay a fee on a $300,000 loan to Fannie Mae of $4,500 over $23. The fees that they're charging, that's cruel and unusual punishment for people.
Cruel and unusual punishment, guys?
Yeah, I'll tell you, Rodney, some people on Wall Street, some analysts are saying, hey, maybe the Federal Reserve should actually raise rates because that would get people off of their seats and into the market to buy houses, and would also stop the banks from just investing in treasuries and start investing in making loans to make money off those loans. What do you make of that argument?
Well, we've seen interest rates fly higher the last 6 weeks. Look at mortgage applications for purchases the last 2 weeks, down dramatically. Folks, I'm telling you, the business that's in the pipeline is good right now, but home sales for January and February are set to be weak because people are fearful of what interest rates are doing right now.
Rob. Well, Rodney, I'm a founder of a regional community bank, and part of the problems is the regulations that the feds are putting on small and local community banks make it very difficult to lend the money out. Their reserves have to be so high that they're not able to actually lend the capital. What do you suggest we do?
Well, here's the problem also. Banks are overlaying credit restrictions on people. And here's what we have to do. We have to fix the credit score guidelines and the credit scoring system. We have to make it where people like yourself can make a decision more so based on the borrower that's placed in front of them than the credit score. On a Fannie and Freddie loan, if you fall 2 points below because of some small glitch or a credit card company drops down your credit line and it drops, then all of a sudden you can't access a loan and we can't make a decision. So I agree. They need to drop the requirements on the local banks, but they also need to get Fannie and Freddie fixed immediately. This is a major problem.
I have clients in the debt collection business and the debt consolidation business, and I can say absolutely they're booming right now, unfortunately. Yeah. Now, when it comes to the housing market, if you take a look, not too long ago, we had 16 months of inventory. Now, roughly, we only have 10 months of inventory. So wouldn't you say that that's a positive measure?
It looks like it's improving. What happened with some of the foreclosures that were delayed? That can be a major part of the inventories that you're seeing the decrease, but those could increase right away. What I think that we need to do is we need to stop many of these banks, the B of A's, the Chases, the big banks of the world that seem to guide the world, and we need to start having where their guidelines are stay the same for a while. Customers are turning into our offices, and by the time they go buy a home, the guideline is changed, and the guideline is effective immediately. I'm sorry, you're wiped out from buying a home.
All right. Well, obviously, it's going to be a tough year ahead. There are some people predicting that we may not see prices recover in the West, in Arizona, California, Nevada, till the 2030s.
So, 2030s? Goodness gracious.
Yep. Let's hope they're wrong. All right. Rodney Anderson, Executive Director of Supreme Lending. Thank you very much.